The data is in and it's not looking good. The mainstream media agrees, but they say it's only temporary. It's going to skyrocket afterwards, they say. Well, the economic conditions were rotting before 2020. They weren't doing well. They're nothing to brag about at all. Today we live in a very unusual time, one in which we have tech stocks rising higher and higher, and thousands of people living near these massive corporations, living in their vehicles, lining up at food banks. The great disparity will become much wider even after we're being told we've recovered from this crisis. You came here for the truth, so let me unveil that for you. I have an absolutely jam-packed episode to get into today. There's no possible way I can cover it all, and yet somehow I have to, so let's begin. The economic data is even worse than Wall Street feared. The economy is clearly in ruins here. This is the kind of thing that we're dealing with right now. The only question is, how long will this go on for? Consumer and manufacturing reports for March showed the hit to the economy was deeper in the early weeks of the shutdown than expected, because they were talking about how this is going to be a problem during these certain months and then things are going to be better, and yet already it's looking worse. I'm going to show you some charts. I'm going to show you some details. We're going to look specifically at the analysis when you go deep into it, but also I want to show you some of the anecdotal evidence that I believe is even more telling. March retail sales fell 8.7%, the most ever in government data. Regional manufacturing activity hit an all-time low, declining to a shocking negative 78%. The economy is clearly in ruins here. These are the type of quotes that I'm pulling up. These are the type of statistics, but you don't have to worry, because that V-shaped recovery, or maybe the soft V-shaped recovery, is coming in. Retail store sales by category, and you could see one section did do very well, and that is food and beverage, because people, of course, they were worried, they're concerned, they're buying cans, they're buying rice, they're doing all of this, and so we see this actually benefiting these particular companies, these particular suppliers. But for the most part, when you see the negatives on this list, it really does pull the average down. Here's the chart that shows you the retail sales plummeting, and it is off the charts. This chart goes back to 2005 or so, and you can just see how terrible it looks. This one here shows the industrial production plummeting down 5.4% into the negative. We haven't seen that since the 1940s, so that should tell you how serious this really is. Michigan's unemployment website crashes again. This is the second time that this has happened just in the recent past, as an overwhelming number of Michiganders attempt to file for benefits. More than 1 million claims. That is more than a quarter of the state's workforce. Think about this for a second. When more than 25% of the workers in the state are filing for unemployment, this goes beyond what we've ever seen before. And I don't think this is the worst of it yet. We have to deal with these problems as they compound. The issue gets worse every single day. Economically, the situation gets worse. That's why there's this huge rush to reopen, but there are the risks and the benefits that they're trying to basically balance. In general, what you can see with the employee benefits that are trying to be given out through the various stimulus programs, largely that will go to the big businesses and the bigger businesses. The small businesses, they're going to be destroyed. The average person, they're going to get the peanuts. And people will just accept whatever they can get. This is how you do it every time. You push people into a problem that they can't dig themselves out of. They have to go to their government. And of course, what happens? They say, look, we're going to give you this awesome paycheck, $1,200. Now, we're going to give this other company over here $1.2 billion. But you don't care because you're getting the $1,200, so you're satisfied. You're getting some. Meanwhile, they're getting the big chunk. That's the way this works. That's the way the game works. It's called a revolving door, and you need to understand it, because those in the big industry, they work with those in the government. It doesn't matter what year this is. We could look at this in 10 years. We could look at this 10 years ago. It's the same exact thing. This happens over and over and over again, but people, I see it all the time. Oh, the changes are coming. And then here we are with more of the same. This is such a huge issue that we need to discuss. Lack of savings worsens the pain of this downturn. Many of the millions of restaurant, hotel, and store workers affected by the shutdowns are expected to fall behind on rent and other bills. So you got this one thing first. The average individual, these people, they are living paycheck to paycheck. They've got a lot of debt, okay? They got the credit card debt, they've got the student debt, they've got mortgages, they've got everything, all right? Now, they're unable to pay because if they're living paycheck to paycheck, suddenly they've got some serious problems in a short period of time. Now, that impacts these people. There's no new income coming in. Maybe you got that $1,200. Okay, well, that just goes to pay some of this, but not anything new. They need more money from the government in order to pay it. That's just the way it is. But beyond that, then we look at who they owe that money to. This is all going to impact those banks, those financial companies. Everybody here is going to realize how bad this is in a short period of time, particularly if this extends out a little further. I'll talk more about that in a second, but understand this. The lack of savings, the extreme levels of debt that we have seen, that I've been talking about here on the channel, that you and I have definitely been noticing. Okay, if you're on this channel, you know what I'm talking about. It's a big problem, and unfortunately for the majority out there, they're going to suffer the consequences. This is the kind of information I've been seeing. The major banks in the US are anticipating a flood of loan defaults as households and business customers take a big financial hit. JP Morgan, Wells Fargo, Bank of America, Citigroup, Goldman Sachs raised the fund set aside for bad loans by nearly $20 billion. Essentially, they see the wave coming in. They know it's going to happen. They already know that, and they're trying to mitigate some of the loss. Now, I don't think they are doing enough. They never will do enough because they know they're going to be getting a bailout. They could say, well, you know what, we put aside that $20 billion, so help us out. They'll probably get a bailout. Maybe they'll do some bail-ins along the way. I'm not really sure what's going to happen exactly, but I know if people can't pay their bills, the banks are going to take a hit. That's going to start to spiral out of control. And of course, the derivatives are going to be at the center of it all. Nobody wants to talk about that. Nobody wants to talk about what's happening with corporate debt. Don't worry though, because the Federal Reserve is buying it all up. This was something I found interesting. Binge Nation, average American streams 8 hours of content per day right now. And this is the fact that you have these people. They're waiting around at home, potentially because they're being forced to, and others because they're relying on their 9-to-5 job. These people are stuck. What can they do? They want to be working. They're able to be working right now, but their company is closed down. The mall is closed down. That's where they work. Their business is unable to operate. They can't switch to a work from home scenario. So they're just stuck there. They're just waiting. And what are they doing? They're killing time. I see this as a big issue because what if it persists for a very long period? We're going to have layoffs. It's not going to be temporary. It's going to be permanent. And I use the word layoff when really I'm talking about being fired. Another 5 million unemployment claims could be tallied, but the job loss trend might be peaking. Oh, that's right. We're going to see 22 million people unemployed. So by the time you're watching this, actually, those numbers may have already come out. But essentially what we're looking at here is millions of people every single week filing for unemployment, currently unemployed. It's going to be historic, but you know what? It's peaking. So you don't really have to worry about it. Everything's okay. This is so unprecedented on so many levels, and yet the media, they're always trying to spin it. I'm always accused of being negative, but look what the media does every single time. They try to spin it to say, yeah, it's bad, but don't worry, it's good. When really, you should be concerned when you have a right to be concerned. Look at what the Federal Reserve is doing today. If you're not worried about it, there's something totally wrong. You haven't read the history. You don't understand how the Federal Reserve is created. You don't know a single thing about the institution. The Federal Reserve should not be doing any of the programs that they have done. They shouldn't even exist. But that's a whole different topic. Let's move on. I can't believe this information is actually put out here in the public, but really, I guess, why not? Check this out, blackrockblog.com, all right? You know what BlackRock is doing? They're facilitating the actual transactions for what the Federal Reserve is doing now, all the insanity. Check this out. So, we are thinking about the coming weeks in terms of two intervals. Initially, we plan on keeping a significant cash cushion given uncertainty as to the length and the depth of the economic downturn, okay? They want more cash. And check this out. At the same time, we will follow the Fed and other developed market central banks by purchasing what they're purchasing and assets that rhyme with those. BlackRock, who's doing the buying, is basically saying we're just going to buy whatever they want us to buy and we're going to copy it. Is this not the most ridiculous thing we have ever seen before? This is not a market. The market is dead. The market is dead. Understand that the market is dead. After adding the ECB's latest balance sheet data, G3 central banks, Fed, ECB, and the BOJ have injected a total of $2.7 trillion of liquidity into the global markets since March. Since March, we're talking about nearly $3 trillion that have been pumped in. There has never been a time like this before, ever in the history of the world. And I'll put on top of that, we have never seen this on a global scale. That is very disastrous to the monetary system, and when it fails, it will fail big. Oh, but your government, they're going to take care of you. They got your back. Don't worry. Actually, they don't. Stop saying that. Take a look at this. The new stimulus passed by Congress includes a temporary tax loophole for people who make at least $1 million a year. The analysis of the change shows 43,000 taxpayers in the highest income bracket making more than $1 million a year could save a combined $70 billion in taxes. Okay, that's fine. Almost all benefits from the tax break go to people making more than $100,000 a year. So the smallest group of people in the US are going to get the biggest portion of the tax break, and the remainder of the individuals are going to get the crumbs. If you're lucky, you're going to get that $1,200. Why do people believe what they read and what they see? It's all propaganda. Edward Bernays put it in a book and gave it to people. It's there for you to understand. So the Bank of Canada decided to leave their interest rates at 0.25%. I mean, that is just a real strong interest rate there. Lots of room to maneuver, that's for sure. Well, they added 2 new things to their list. That's really good because they were already doing quantitative easing, never done before in history for the Bank of Canada. And now they are extending that QE. They are actually going to do 2 things. They're going to buy provincial debt. Isn't that fantastic? And they're also going to buy the corporate debt. So they're doing what the others are doing, buying all forms of debt possible. That means if you are one of the major corporations in Canada, you're going to get a bailout. That's what this is. It's QE money printed out of thin air, directed right at you. So if you're the average individual in Canada and you're getting some fantastic stimulus from the government, I assure you it's going to dry up very soon. They're not going to help you. Maybe if you're unemployed, they're going to give you a little bit here and there. That's going to run out, but don't worry because that QE from the government over to those multi-billion-dollar conglomerates will never dry up. I'm going to show you several charts here. I got a lot of data just to move through really quickly. Empire State Manufacturing has fallen down to which we have never seen before. As far as I'm aware, this chart goes back to 2001. It's ridiculous, minus 78. This chart shows you several all at once. You're looking at the Philadelphia Fed Business Outlook, the manufacturing, several manufacturing indexes. They're all just destroyed right now. New York Fed provides this. You can see the current indicators, whether we're looking at general business conditions, new orders and shipments, unfilled orders, all of them, down, down, down. Of course, when you break it down, you look at the different shipping indicators, one of them being the Cass Freight Index, shipments specifically, year over year change minus 9%. That's historic. There haven't been many times where we have seen numbers this bad. Other ones on here are the expenditures, that's down, truckload line haul index, that's down, intermodal price index, that's down. Do you see a trend here? There's the chart that basically shows you the truckload line haul rates getting absolutely punished. Haven't seen these levels since the financial crisis. Rice ATM feeds Vietnam's poor. That's how we're dealing with this today, where people, they need to go to this ATM for the most basic of things to get rice. This is what we're dealing with right now when you've got a large percentage of the population, and without this essential thing, their food, it's literally impossible to live. It's a wild time, that's for sure. Two quick things before I finish off. Number one, former Fed Chairman Paul Volcker once said in an interview that it is a governmental responsibility to maintain the value of the currency they issue, and when they fail to do that, it is something that undermines an essential trust in government. Couldn't agree more. If they're forcing you on a particular legal tender, which we can argue about at a different time, and then they're destroying the value of it intentionally, the people should be speaking up about it. The bond king, Jeffrey Gundlach, had this to say, this one here first on Twitter: the Federal Reserve is presently acting in blatant non-compliance with the Federal Reserve Act of 1913. An institution violating the rules of its own charter is de facto admitting that said institution has failed and is fundamentally broken. He knows what he's doing right now. He's saying the Federal Reserve is going to try and push this much higher. He realizes that. But he's saying they completely have broken the markets. Of course, the Federal Reserve will make some wonky semantic argument about why they are, quote, technically in, quote, compliance, just like the balance sheet expansion program last fall was not QE. We all know that was a lie today, and unfortunately, so many people still believe in the fake Fed garbage. That's all for this video. If you found it informative, hit that thumbs up button. By clicking one button on your screen, you are supporting me, so I want to thank you very much for that. If you want to check me out on Instagram and on Twitter, I do content on there different from what you see here every single day. Definitely check me out at The Money GPS. Online sales have skyrocketed for obvious reasons. Several months ago, I had created this free e-course for my subscribers to learn how to sell online. If you want to check it out, it's still completely free, theamazongps.com. The financial system is a bunch of garbage. It's a heaping pile of garbage when you look at it. And if people only understood that, they would make much better decisions with their finances. These two books will get into the nitty-gritty and yet none of that jargon. So if you're interested, check them out at the link in the description. If you want the audiobook instead, themoneygps.com. This video here really took off, and I just wanted to say, if you haven't seen it already, I highly recommend checking it out. A lot of good detail in here. Click on it. I'll see you there.